Hello everyone, welcome to today's backtest. And today's backtest is going to be on Euro USD. For the first time, our backtest will be on Euro USD on the 3rd of February. On the 3rd of February. Now, quickly let's do a daily analysis on Euro USD. Okay. Now you see price has taken out these highs. Okay, price has taken out buy side buy side liquidity from this high right here. Okay, and you see this gap down in price. Okay, so if price works its way through this inefficiency, this CB right here. Okay, if you notice, I have to give room for the volume imbalance. Okay, the space between the body of these two candles right here, that's the volume imbalance. So if price works its way through this inefficiency, like what I mean is, let's say price close down. Okay, price trades down below this BC. This is a buy side imbalance, sell side inefficiency. So price trades down. Let's say price trades down below it and closes below it. Okay, then we'll be expecting a rally up in price. Okay, maybe into the BC, back into the BC. Okay, so use it as an inversion fair value gap. Okay, just the way price uses inversion fair value gap. Okay, then our next stop will be, our next draw on liquidity would be this low. Okay, then after price takes out this low, then we'll be looking to see if price would want to take out these relative equal lows. Okay, these are relative equal lows. You can see this low at the left is lower than the low at the right. Okay, so it's a high probability. Okay, if price is at this level, for price to want to run up, to run down this low. Okay, then after this low, then we look at this one right here. So that's my trading idea for Euro USD. That's my trading idea for Euro USD. Now down to business. We're going to be, our backtest is on the 3rd of February, like I said, which is this candle right here, this bullish candle right here. Okay, we are going to discuss the run up in price. Okay, the the run up in price, okay, of this particular candle up to this yellow rectangle right here. Okay, it's actually run up to the yellow rectangle for today, which is 4th of February. Let me go to smaller time frame. Okay, not smaller time frame though, this is for our charts. Okay, so we'll be talking on the run up in price into this. If you watch, there's an inefficiency here. Okay, and this is a CB, sell side imbalance, buy side inefficiency, sell side imbalance, buy side inefficiency, meaning only sell side delivery was offered at this point. Okay, where I drew this yellow rectangle. So price will trade up to offer buy side. This is how it looks on the 1 hour time frame. Okay, and on the 1 hour time frame, you can see two inefficiencies. Okay, two CBs, 1 and 2. Okay, but this is the one we're focused on, and this is the one that's going to be on our discussion. Okay, on the run up in price up to that level. Now down to the 5 minute time frame, and now you know that, okay, let's say you know that the bias for 3rd of February was bullish. Okay, let's say you know the bias is going to be bullish. Okay, now on your smaller time frames, you're going to be looking for buy opportunities. How does that look like? This is a 5 minute time frame. So this is 3rd, and the rally started during the New York AM session. And the New York AM session is from the Q zone for the New York AM session is from 7 a.m. as around there 7 a.m. to 12 p.m. Okay, and you can start looking for setup after 8:30 as well, but I choose to go with after 8:30. This is 8:30. Okay, so since we are anticipating price to go up for this day, let's say you know the bias is bullish. Okay, after 8:30 you'll be looking for price to run down a low or relative equal lows, then to take out sell side liquidity from that low or from those lows, then use that sell side liquidity to run up. Now if you are familiar with the different sessions, this particular rundown in price happened during the London Q zone, okay, which is from 2 a.m. to 5 a.m. Okay, so after the key zone, that was when these lows actually formed. Okay, now after 8:30, this right here, you can see these lows. Let me zoom them out. This one at the left and this one at the right. If I go to a 1 minute time frame, you see them really clear. These are the lows. Okay, see this one at the left, this one at the right, and you see this one at the left is slightly lower than this one at the right, which makes it high probability, okay, when price takes it out to rally up. So back to the 5 minute time frame. Now after 8:30, price runs to take out sell side liquidity from these lows, then it displaced up. Okay, it ran down with displacement. Look at this candle right here. You can see the strong drop in price. Okay, so there are some traders that will feel like this is a breakout. Okay, maybe due to the force at which price is running down to take out this sell side. Okay, they will think this is a breakout. Then they will put a sell order at this bottom, at the bottom of this low. So when price breaks it out, they can continue the sell. Okay, so they will think it's a continuation. There will be a continuation of selling in price. Okay, they will think after, let's say after price breaks out this low, it's going to continue selling further. Okay, but actually price is actually going to take out these lows to grab sell side liquidity, okay, to rally up. And if the bias you already frame in your mind is that price is going to go up for the day, this is the type of setup you want to look for. Okay, so price trades down to take out sell side, trades down with displacement, and rallies up with displacement as well. Okay, leaving what? Leaving a fair value gap open. You can see these three candles makes the gap. The candle at 920. Let me take this off. The candle at 920, candle at 925, and candle at 930. This is how it looks. This is your fair value gap. So after price created this fair value gap, price traded a bit into the upper quadrant of the fair value gap. Okay, but not so much. Then price rallied up. So after this rally up, it went down further to trade into the fair value gap, which you can see right here. Let me add the midpoint to it. And you can see how price respects this midpoint. You can see the wick goes below the gap, but the body of the candle is respecting is staying at this upper quadrant of the gap. You can see that. Okay, so if I see something like this, I will know that price is strongly bullish and price is willing to go to rally up. And you can see the rally up from this point. Price starts rallying, and some of you may be wondering, if you were on a trade like this, let's say you actually saw this trade and you enter this trade, okay, where are you going to put your take profits? Where is your stop loss going to be? Where is your take profit going to be? So like I said, there are three candles that makes up the fair value gap. Okay, so it's drawn from the high of this candle at 920 to the low of this candle. Okay, then this candle at 925 is actually the one housing the gap. So if I am to put my stop loss, if I am to set my stop loss, let's say, okay, I bought at the top of the gap, my stop loss is going to be at the low of this first candle. So this candle one, this candle two, and this candle three. Okay, so my stop loss is going to be at candle one of the fair value gap, at the low of candle one of the fair value gap. That's if I'm buying. But for those that are new, you can place your stop loss at this point. Okay, there is actually nothing wrong with placing your stop loss here at this low. That's very safe. Okay, but you can as well also place your stop loss as candle one of the fair value gap. So this is how it will look. And also, where is your take profit likely going to be? Okay, so to frame where you are going to place your take profit, you need to go to an higher time frame. Okay, and this is that leg in price, okay, that formed the low which price took out. And you can see this high right here in price. Okay, so this high will be our first take profits target. This high right here. So you see price takes out the high. This already is a 5.8 risk to reward ratio, which means if you're risking $10 for this, okay, let's make it small. If you're risking $1 for this trade, you'll be getting $5.8. How's that? That's a very good trade. Then apart from that high, price will also likely take out. Let me bring your attention to this high right here. You can see this high right here. Okay, so why price took out this high? Price traded up to this high, but price was unable to take out this high at this point in time. Okay, then price rallies down back into the range. So this actually are relative equal highs. Okay, this becomes relative equal highs where buy side liquidity is resting. Okay, so price will likely want to take out these highs as well, this one and this one, which you can see price did. Okay, price took out these highs during the Asian session. That's around 8 to 9, okay, to 10 p.m. So these highs are another level where you can take profits as well. Okay, but for those that are new, okay, once you take your profits at this level, you understand, you can close your trade. It's a 5 risk to reward ratio. That's a very good trade. Okay, once you take your profit at this level, you can actually close the trade and be satisfied, be contented with what you have. Then apart from those eyes, another place where you can take your profits will be this inefficiency right here, this CB right here, sell side imbalance, buy side inefficiency at the 1 hour time frame. And you can see price trading into it. Okay, after taking out these eyes on the 15-minute time frame. So after price took out these eyes on the 15-minute time frame, it trades into this inefficiency at the 1 hour time frame. And you can see these highs are directly below, sorry, this gap right here, this CB right here is directly below these highs. Okay, so why price is trading above this high is trading into this inefficiency as well. So you can see the 2022 mentorship ICT mentorship model doesn't just work on Nasdaq and on gold. It actually works on other forex pairs, okay, which I have shown to you today on EURUSD. So I hope you found this insightful, and if this has brought some value to you, make sure you drop a like, subscribe. And also this week is NFP week, okay? So on Thursday and Friday will be NFP. And if you're a new trader, try to avoid these days, okay? If you know your experience, you can handle it, you can deal with it. Okay, fine. I'm not a trade advisor, but you should watch out for the NFP week, okay? Sometimes it can be very deadly. So until next time, have a fruitful week.